I'm delighted to talk today, give you some perspectives on my 15 years or so experience with renewable energy generation. Actually, the experience is longer standing than that. I made solar cells back in university 30 years ago, but it took me a while to jump on the bandwagon. I did some other things in the meantime. Last year I spoke about negawatts, so energy efficiency, and this year I'm going to talk about megawatts, which is relevant for most renewable energy generation technologies. We're an advisory firm. We help companies with fundraising and M&A, that kind of stuff. With respect to renewable energy generation specifically, over the last 5 years, we've helped clients successfully raise equity funding in the PV, wind power, and biomass sectors. This is some analysis I did about in 2010 around the levelized cost of energy for wind and PV. The reason why I got very excited about renewable energy generation about 15 years ago was my experience in the semiconductor industry, which had something called Moore's Law, driving costs down. And I saw the same phenomenon in PV, and I said, this is going to be very big one day. At the time, PV was very expensive in 2010, $125 to $300 per megawatt hour, and a lot of people said this is never going to take off. I think, anyway, it seemed to me that it would be inevitable that at some point wind and PV would cross over, be it retail electricity or even utility scale electricity, so it was worth getting involved in. Fast forward a bit to today. I think today wind power and PV are very competitive in most cases. This is LCOE analysis again. It depends, of course, on the segment that they're addressing and the geography, etc. But for utility scale, you're talking about anywhere from $30 to $50 per megawatt hour, which is already, edging a lot of incumbent technologies out of the picture. PV has clearly gone faster than anyone would have expected, and overall wind power and PV, I think, in this kind of a cost metric, can be judged as huge success stories. Despite that success and driving down costs, renewable energy generation project investment has stagnated about $300 billion per year, with a little bit up and down, almost cyclicality, since 2011. And there's a story, obviously, behind that. Within that, again, wind power and PV have kind of been the stalwarts relative to other renewable energy generating technologies. This is the picture specifically in the UK. It's been a lot worse. The UK project investment in renewable energy last year was below even the 2009 level. I think we all, those participants in this sector, all have our views on what lies behind it, but it's kind of a pretty sorry state anyway. Offshore wind is really the big topic now, and that's, I believe, going to continue to grow strongly. There will be, from one year to the next, a lot of volatility. But the other technologies in the UK, I think question marks there. A lot of things will need to change for them to really take off in a big way. Renewable energy project situation is mirrored in the dollar invested in technologies serving that space. If a served, i.e. project market, isn't big and growing, why would a VC put money into the technologies that enable that industry? Again, of the dollar spent in renewable energy tech investment, most of it has been, I think, through cycle, been going to PV and wind. The next slide is actually showing the previous leading VCs in renewable energy generation technology investments. Many of them have kind of disappeared from participating in the sector, people like Kleiner Perkins, etc. There's very few of them actually still even bother with this space now, and there's others which aren't on this slide which have just gone out of business, so to speak, by making too many bad investment decisions towards renewable energy generation technologists. What went wrong? Well, lots of possible excuses, lots of real excuses. China, the financial crisis, fossil fuel prices, etc. Not all of it was actually bad. I think to an extent the trouble, if you like, in the renewable energy generation sector stems from the industry's own success. Costs and therefore prices of the finished products were driven down so quickly that the volumes installed in many jurisdictions exceeded expectations. The feed-in tariffs didn't keep pace with that, so governments were left with large, 20 years often, liabilities, and in the end they just cut or even eliminate completely feed-in tariffs. And is that success or is it failure? I think success in that nobody doubts the prospects for new renewable energy generation overall. The next slide is kind of showing a little bit where we see the various technologies on the hype curve. So things like PV and wind, and to an extent biomass and solar thermal, they're kind of established, and they're just going to play out in a kind of a normal way. Other technologies are kind of stuck in the trough. Concentrated solar power, marine energy generation. Again, this is my opinion. Sorry if I'm kind of upsetting anybody. Fuel cells. I think it remains to be seen whether they're going to kind of have this uplift of the other more advanced technologies, or they're going to stay there in the doldrums, or they're even never going to make it big time. So investors have moved on. When I started in this space, people spoke about Cleantech 1.0. It was PV and wind. I think about 5 to 8 years ago, people started broadening out the sectors, energy efficiency, energy storage, green chemicals, etc. But there was still kind of a vertical market focus in Cleantech 2.0. That really hasn't worked very well for investors either. So the latest and greatest is to do kind of horizontal plays, be they software enabled across the verticals, and hopefully that will go better for them than kind of the more hardware plays. But it is a context that makes it difficult for hardware-related companies to raise money. So I think given that sobering view, what should you do if, let's face it, you have a kind of hardware-centric renewable energy generation company that needs funding? Well, from my perspective, there's no silver bullet. There's various things you should try to do that will help you. Those include things like being in a niche segment, aligning yourself with a corporate VC, maybe having a little bit of software enablement in there, whatever. There's a host of things you can do, and of course, strong execution. I think, and if you can do those things, those kinds of things right, whatever is best for you, and you start to make a success, then it's much easier to get funding. It's easier to fund a success story, hardware story, than a wannabe hardware story. So that's just a little bit of advice we'd give to companies. And I think I'd like to hand it over to the companies themselves and see how they're doing in that context. Thank you.